Well, for more on the housing market in China, I'm joined by Adam Sarhan, founder and the CEO of 50 Park Investments. Welcome to the show.
Thank you.
So how would you say these pilot cities are doing when it comes to pushing the rental market in order to stabilize housing prices?
You know, the government has done an absolutely fantastic job of curbing the housing market. And over the last 18 months or so, 12 to 18 months, we've seen housing prices cool off. They were really taking off. They were red hot. And then about a year ago, the government came in and said, you know what, we have to slow it down. Otherwise, we get a bubble. And the last thing anybody wants to have is a very hot bubble. So what's happening now, as you reported, is that housing prices have not only cooled off, but they're starting to stabilize, and that's exactly what the government wants.
Now, what about the residents themselves? How are the new residents reacting to this, as well as the residents who already own homes in some of these pilot cities?
So that's a great point. The residents are very happy right now because of two things are happening. Number one, they're able to be able to afford the housing. It's not just one thing to have you own a house and it goes up, it goes up, it goes up. It gets to a point where it's cost prohibitive and new residents can't buy. So the residents that own are happy because nobody wants to be involved with a market that's too hot because then it overheats. And what happens after every bubble, there's a subsequent bust and the bursting of the bubble. So if you own an asset and the asset goes up too much, too far, too fast, after every single bubble in history, it inevitably crashes, and the residents don't want that.
Now, let's also look at some of these partnerships. We know that in Hangzhou, the local government is partnering with Alibaba. They want them to use their technology to create an online system for rental housing. What sort of business opportunities do you see opening up in this sector?
That's a very good question. There's a lot of opportunities showing up across the board because as residents and cities and technology companies interact more with each other, it reduces inefficiencies, it helps the marketplace, and it leads to job creation. And job creation is one of, if not the best, stabilizers for a rising housing market.
And how would you describe right now the current status of China's property market overall?
I think it's excellent. The Chinese government has done a fantastic job stabilizing prices, and now you're having the intended cooling off of prices. And as long as prices come down in a slow and measured fashion, which they have been, the environment remains very, very, very strong.
So if things continue on this current trajectory, what do you think we'll see, though, in terms of perhaps bubbles or other risks in this sector?
So if it continues on the current trajectory, what we're going to see is a stabilization of prices, number one. Number two, demand is going to continue to increase because the economy is growing. And then number three, as you mentioned, supply remains very, very tight. So if we can see some of the buyers that own homes for a long time, we'll reduce the speculation or all the speculative buying, and we'll move the new buyers into rentals until they can afford to buy. That should be a very good equilibrium for housing prices.
And now, Adam, talk about the regulations on loans to developers and mortgage loans and the impact that that's having.
Sure, that's a fantastic point. So the way the regulation works on mortgages is that you don't want to have speculative froth in any kind of environment. So a while ago, the government came out and said, all right, we have to curb excessive buying, and we can't have any kind of crazy, taking out mortgages, zero down, and several mortgages, all that fun stuff that we know are the ingredients of a big bubble. So what happened was we had some regulation kick in. Mortgages, excessive mortgages, speculative mortgages have been reduced or squeezed out of the system, and now it's a lot more stable. And that's exactly what you want to see because that's a perfect recipe for a long-term environment of a healthy housing market.
Now let's move on to property tax. We saw that China's finance minister suggested that property tax legislation could roll out in March of 2019 ahead of a nationwide rollout at a later date. What would that look like, and how ready is China for property tax?
Yeah, that's a really good point. So property tax, as with tax anywhere in the world, it's necessary, but it's also very sensitive because it moves the marginal buyers very, very aggressively. So if the property tax comes in too high or it comes out too fast, it could curb a lot of the buying and squeeze out a lot of the speculative activity. Now, on the other hand, if property tax is slow and measured and it's accepted well by the environment, meaning demand still remains strong, it'll be absorbed without a problem.
And what are some of the important trends that we should be keeping an eye on, say, in the top-tier markets versus the smaller ones?
The most important trend for me is job growth and job creation. Where are businesses going, like Alibaba that you mentioned, and other businesses, Baidu, where are they moving their operations? Where do you see the economy moving? Because money in general, if you look at housing prices, it always leads. Money is a leading indicator. And then housing prices is a secondary indicator. So wherever commerce is happening, wherever the economy is, you're seeing growth, you're seeing healthy job creation, housing prices invariably, bearing some unforeseen event, of course, follow and tend to follow suit. So for me, I always look at economic activity. I always look at for commerce. I always look at where the company is moving, where are jobs being created first and foremost, and then invariably second, the second piece of the equation is the housing prices.
All right, well, thank you so much for your insights. Adam Sarhan there, founder and CEO of 50 Park Investments.